Hello guys, this is your modern day spokesman and welcome back to the channel. If you're new to the channel, feel welcomed. Guys, today we're going to be looking at group reporting, specifically on the intra-group transactions involving sales of inventory from the subsidiary to the parent at a profit. Now at the end of this video, you're going to be able to generalize consolidated pro forma journals for intra-group transactions when there is an unrealized profit, and also the tax implications and how you record that. I'm going to be showing you on this video. Enjoy. So in this case, our subsidiary is Sky Ltd, which sells inventory to the parent, in this case Cloud Ltd. So during the 2016 and 2017 financial year, Sky Ltd sold inventory to Cloud Ltd for a profit of 25%. We're going to assume a tax rate of 28%. On 31 December 2016, Cloud had inventory on hand of 300,000. On 31 December 2017, Cloud Ltd had inventory on hand worth 200,000. Now this is how we're going to perform the pro forma journal for the first year end, which is 31 December 2016. Now with this one, we first have to start off by dating the journal, right, which is 31 December 2016. Now in this case, our cost of sales is going to be debited by 60,000 to the profit and loss statement of Sky Ltd, which is an amount of 60,000, and we're going to credit inventory of 60,000. So why is this the case? This is because Sky Ltd is the one which is making their unrealized profit, since they are selling at a profit to the parent. So on 31 December, the parent, which is Cloud Ltd, at 300,000. So we are basically removing the unrealized profit through this calculation, the 25 divided by 125. We are removing the unrealized profit from the inventory of Cloud Ltd by performing this calculation. So now, although there was no realized profit on these transactions, there is, however, tax implications to this transaction. So this is why we have our deferred tax and our income tax expense. So that unrealized profit of 60,000 is going to be multiplied by the 28%, which is the applicable tax rate in this example, and we get 16,800, which we are going to debit to our statement of financial position, and then the income tax expense of the same amount, 16,800. Now this process is called the elimination of unrealized profit in the closing inventory of Cloud Ltd. Why is this in the closing inventory of Cloud Ltd? Simply because Cloud Ltd is the one who bought the company who bought the stock from Sky Ltd at a profit. So the unrealized profit will actually be on the closing inventory of the parent company, since they are the one who bought the the stock which has the unrealized profit. Okay. So now for the 2017 financial year, right, our subsidiary, in this case Sky Ltd, didn't make a profit. Actually, it made an unrealized profit of 60,000. So these are the retained earnings at the beginning of the year in the books of Sky Ltd. Remember, Sky Ltd is the subsidiary which made the unrealized profit, right? So we are going to debit the unrealized profit in the books of Sky Ltd, and also credit the cost of sales in the same books of our subsidiary which did not make the unrealized profit. So same as the previous journal, there's tax implications. This is the tax implications that we highlighted, and I showed you how to calculate the tax implications on the previous journal, right? So this is still the elimination of the unrealized profit in the opening inventory of Cloud Ltd, since this is being carried forward. This time around we have opening inventory. On the previous journal there was no opening inventory. right? Because that was the first transaction that happened in that financial year. There was nothing that happened previously. So now, since there was a transaction that happened on the 2016 financial year, which ended 31 December 2016. Now, when we open for the current financial year, which is the 2017 financial year, we are going to carry forward or carry over the previous balances of the unrealized profits. Now, we have to deal with the 200,000 which was on hand, the inventory of stock which was on hand in the books of Cloud Ltd at the end of the current year, which is 2017 31 December. Alright, we'll first have to do what we did last time, which is removing the unrealized profit from the closing inventory, since you cannot make profit if the companies in the same group are selling to each other. We'll have to remove the unrealized profit. So in this case, the inventory which was on hand was 200,000. So we multiply that with 25%. This is the 25% to remove the unrealized profit, which turns out to be 40,000 in this case. We're going to debit and credit that to our cost of sales in the books of Sky Ltd, and on the inventory side we are going to credit it, which means we are removing the inventory of 40,000. Remember, inventory, since it's an asset, decreases on the credit side. This is your basic accounting equation, so just in case you forgot about that. And just like in the previous example, even though there was an unrealized profit that occurred here, it is still subject to tax implications. So the 40,000, which was our unrealized profit in this case, is going to be subjected to tax at 28%. This is the 28% here on the deferred tax, which gives us an amount of 11,200. We're gonna debit that to our deferred taxes and then credit that to our income tax expense on the books of Sky Ltd. Right, Sky Ltd is the one that has to pay the income tax expense, since they are the ones who sold the inventory to the parent. So this is known as an elimination of profit, of unrealized profit in the inventory of Cloud Ltd. It's unrealized profit in the inventory of Cloud Ltd, since Cloud Ltd is the one that bought the inventory. They're the ones that bought the inventory, so it cannot be unrealized profit on the books of Sky Ltd, because Sky Ltd does not have this inventory on its books. The inventory is actually on the Cloud Ltd books, which is the company that bought the stock. So that's basically it on this one. Guys, I'd like to thank you for watching this video. I hope you enjoyed the video. If you did, please give it a like, and don't forget to hit the subscribe button so that when I upload any future videos, you guys are gonna be the first ones to know.